Delete all the trend indicators you're using right now. The new era of trading has come, and it has brought us this holy grail of trend indicators. I'll show you how you can read this indicator and use it in your trading strategies. So I'm in TradingView, and I'm going to be using a 1-hour time frame on GBP USD chart. This strategy combines the power of an advanced trend indicator with a simple momentum oscillator to give you precise signals for entering and exiting trades. Trust me, this one's worth your time. To begin, we're going to add the trend filter indicator to our chart. Open your TradingView account, go to the indicator section, and search for trend filter. After that, add this one created by Big Beluga to the trading chart. Once added, you'll notice the indicator overlays directly on your price chart. It's designed to remove market noise and show trends clearly, along with their strength. But that's not all. This indicator has more to offer. It uses a 2-pole filter to dynamically adjust based on market conditions, giving you accurate insights into whether the market is trending up, down, or entering a transition phase. Now, let's change the settings for optimal use. You can open the settings from here, and first of all, set the length to 34. This makes the indicator smoother and less reactive to short-term price fluctuations. It's important because we're using this indicator as a trend confirmation tool, not for buy or sell signals directly. So when the line turns green in color, it signals an uptrend. Red color indicates a downtrend, and yellow or orange suggests a transition phase where the market might be changing direction. There's also a dotted line that acts as dynamic support in uptrends and resistance in downtrends, providing key levels for monitoring price action. These are all the components about this indicator. Now, of course, we will use another indicator with this one to create an amazing strategy.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
For the strategy, we'll pair this trend indicator with the stochastic oscillator. Go to the Indicators tab again and search for stochastic. Add this one to the trading chart. After that is done, it will be displayed on the trading chart like this. First of all, we will adjust its settings for better accuracy. In the Input section, set the K% length to 5, the K% smoothing to 3, and the D% smoothing to 3 as well. With these settings, the stochastic oscillator becomes a reliable momentum tool for identifying overbought and oversold conditions. Now, let's go through the rules and conditions we need to keep in mind to use these two indicators together. Here's how the strategy works. When the trend filter line is red, indicating a downtrend, we'll wait for both lines of the stochastic oscillator to rise above 80 level, which is this one. This signals overbought conditions. Then, we look for the blue line to cross below the orange line and move below the 80 level. This confirms a sell signal. Similarly, when the trend filter line is green in color, this indicates an upwards trend. During this, we will wait for both orange and blue line go below this line. This will signal oversold conditions. Then, we want the blue line to cross above the orange line and move above this level. So if you find these conditions fulfilled while trading, you can open a buy trade. Now, let's go through live trading examples, which you all have been waiting for. At this point, the trend filter line is red. And if we have a look over here, we can see both stochastic lines are above 80. When the blue line crosses below the orange line and closes below 80, right here, the sell signal is confirmed. So we can enter a sell position here. You can place your stop loss above the recent swing high. You can target a 1-to-2 risk to reward ratio. Now let's see if the trade will play out in our favor. After some time, as you can see, this trade was successful with the price hitting the target profit. Let's go through another example. Here again, we see the trend filter line remains red and the stochastic oscillator shows both lines above 80. Once the blue line crosses below the orange and closes under 80, another sell signal is confirmed. So we got a valid sell signal here as well. We can enter a sell position here, set your stop loss just above the previous swing high, and aim for a 1-to-2 risk to reward ratio. It's amazing how this simple strategy has the capability to double your account size. This trade also hit the target profit, showcasing the strategy's effectiveness. Now, let's see where we get another buy or sell signal. Here we can see the trend filter line is green, indicating an uptrend. And if we have a look at the stochastic indicator for a buy signal, we want the stochastic lines to drop below 20 level, just like it did here. As I shared earlier, this signals oversold conditions. Then, we want the blue K% line to cross above the orange line and close above 20. This confirms a buy signal. So if these conditions are fulfilled, we can open a buy trade. After opening a position, you can set your stop loss at the recent swing high, and the risk to reward ratio can be set at 2-to-1. If you have any other risk management strategy in mind, you can of course go for that. After some time, the position was successful. Let's see if we can find another buy or sell trade example. Here, for example, here on the chart, the trend filter line is green, and both stochastic lines are below 20. When the blue line crosses above the orange and closes above 20 level, the buy signal is confirmed. So we can enter a buy position here. As explained earlier, you can place your stop loss below the recent swing low and target a 1-to-2 risk to reward ratio. This trade was also profitable, with the price advancing to the target. Here, you can see we got a buy signal. The trend filter indicator was green in color. The blue and orange line went below the 20 level, and then the blue line crossed the orange line and closed above the 20 level. But when it closes above the 20 level, we can see the trend filter indicator changed its color to yellow, which means this signal is void now, and we will not enter a buy trade here. If we would have opened a trade here, you can see it would have been a lost trade. So the strategy is also very good at filtering false signals. However, right here we can see that we got valid sell signals, which would have ended in a losing trade, and the strategy gave false signals here. So no strategy is perfect, and there will be false signals, especially during range-bound markets. To filter more false signals, you can use price action analysis. If the price struggles to break a key level, it's best to wait for confirmation of a breakout before taking the trade. You can also add the average directional index, also known as a DX indicator, to identify trending markets. For example, when the ADX line is above 20, it confirms the market is trending. When it's below 20, the market is range-bound and signals are more likely to fail. So you can add another condition in this strategy, which is if all the conditions are fulfilled and the ADX is showing that the market is trending, only then you will open a buy or sell trade. This way signals will be more accurate and better. If you have any questions, feel free to leave a comment, and I'll get back to you as soon as possible. Don't forget to subscribe to the channel and hit the bell icon to stay updated on future strategies. Thanks for watching. I'll see you guys in the next video.